Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, we're going to talk about understanding candlesticks. There's a lot of different types of candlesticks: wide range bars, narrow range bars, bottoming tails, topping tails, dojis, etc., where they happen, how they form, etc., and so forth. It is the foundation of technical analysis, and if you don't understand it, it's going to be very challenging to be a good trader. So today we're going to dig deep into understanding candlesticks, again, how they form, where they form, how they get there, etc., and so forth, because there's a lot of little nuances to that. And again, understanding this will help you understand where the next likely direction of the stock is. It'll make you more accurate in your trading and hopefully more profitable as well. If you like these videos, please click the like button, smash, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is understanding candlesticks. All right. Candlesticks are the foundation of technical analysis. Understanding how a bar forms, where a bar forms, how a bar got to where it is, topping tails, doji bars, bottoming tails, wide range bars, and then we include some volume on that. We look at the chart and go, why did we take that trade? A lot of it is because of how candlesticks form. And a good example of that actually was today with Unmal on FCX. Do you guys remember when he said specifically this morning, and he said, hey, we have to give it a low of the day stop because of the first bar bottoming tail, right? It was because of how that bar formed that he said we need to give it a low of the day stop because we don't have any pivots from the bottoming tail to the current information. And until the stock gives us a pivot, we don't have a firm stop loss, so it needs to be the low of the day because we always have a stop loss. You can never, ever trade without a stop loss, which is obvious, right? So that's what we're going to talk about today. But before we get into that, right, we must first talk about when will the insanity stop? When will it stop? This one is... you know what? It's really a shame. I meant to actually look these stocks up, and maybe I will. I don't know. Maybe you guys can help me with this. No, you don't, Adrian, because I don't have that up for you guys. Why? Because it goes over top of the presentation. So that's the reason you don't see it. All right. So anyway, this week's is, again, it's a little bit old, but it's on purpose. So you can see it says 4 months ago. So what I want you guys to do to help me out here is just kind of look where it says currently I am holding URG, Tilray, EVGO, Palantir, Sens, CLSK. I'm just curious if you guys would go down and somebody would type in the list where URG is today, where Tilray is today, where EVGO is today, where PLTR is today. I'm just curious if you guys would, because again, I forgot to do it this morning and I should have put those in there. But while you're doing that, feeling like a complete and total idiot, should I cut my losses? Now, anytime you're asking a should question with regard to money management, it means you don't have money management. Let me repeat it because it's very, very important. Anytime you ask someone, should I, with regard to money management, particularly in stocks you're already in, you don't have money management. If you don't have money management, you are a gambler. That's it. I know it's hard for people to hear that, and I'm sure this particular person doesn't want to hear it. But if you don't have entry stop target, you are a gambler, period. Go to Las Vegas, go to Monaco, go to Macau, wherever, okay? You'll have more fun doing it that way because clearly this person isn't having any fun. Have about 15,000 in an IRA right now, and I don't want to continue to lose it. Should I sell all of my individual stocks and put them into a SPY or some type of index fund? This is not the thought process, or this is not the approach you should be taking. Clearly, you YOLO'd this, you diamond-handed and got into these stocks, 1, 2, 3, 4, 5, 6. So no one else wants to help me out here, Frank, other than you? I just asked hundreds and hundreds of people, can you tell me the current prices of these stocks? And no one did. So Tilray's at 5, give or take. EVGO's at 9.74. URG's at $1.40. Ooh, big move up. PLT under 11. Holy shit. So it was bad enough back 4 months ago that this person was complaining about how bad things were. And now most of those stocks are significantly under. URG is higher. EVGO is about the same. But Tilray is down another $2 from 7, and they own it at 22. And they own Palantir at 35, and it's at 11, 1080. Oh my goodness. CLSK was at 9 back then. I don't know where it is now. ICLN, I mean, man. Point, it was bad 4 months ago. What is it now? The other thing is, I'm guessing, and I don't know, but I'm going to guess that this person saving $15,000 or $20,000 probably took them a long time, right? I mean, it probably took them years to save that up, right? It takes a while to save money for most people. And you're going to give it all back in 3 months because you don't use stop losses? CLSK is at 685 and it was at 9 back then. I mean, this has gone from bad to dire straits, not the band. Great band, but not the band. This is bad. What's the point? Before, I don't want to belabor it. Use stop losses. Have stop losses, right? I mean, how do you go into this without having an entry, stop, and a target? If you do, you're just gambling. You're just throwing away money, okay? Go into everything with a stop loss, okay? So, with that, wow, ICLN's at 1905 and it's 3196. Wow. The more and more I type the more and more I type out each detail of a loss, I feel like more and more of an idiot. Well, I don't want to agree with you, but you're onto something there, and I feel bad for you. I hope you learned from this lesson because it got a lot worse after this. So I don't know what this person ultimately did, but if they learned from it and they're young, this will be the best lesson they've ever learned in their life. Okay? So let's move along. I know you guys have seen this slide, the next 2 slides, and you're like, yeah. Some of you are like, I get it, Jared, especially folks who have taken professional trading strategies. So I'm not going to spend a lot of time on this. We're going to spend like 1 to 2 minutes, maybe less. All right? So this is the basic candlestick. Okay? You guys have all seen it. Green bar, red bar. And unless you're totally, absolutely, completely new to trading, then this is not new to you, right? So basically, guys, the body of the bar is the open and close of the bar, okay? And the tails are the range of the bar. Let me repeat. The color, the green or the red, the body of the bar, okay, is the open and the close. The tails, the top and the bottom, are the entire range of the bar. And yes, before you even think it, before you say it, before you even pre-think thinking of it, yes, the wicks matter. Yes, the candlesticks matter. Yes, the tails matter. I never understood people who come in and they go, well, does the tail matter? I didn't think the tail mattered. Well, why is it there then? Did the stock trade to that area? If yes, then it's relevant, right? If it traded into that range, it's relevant. So I don't know who started that mantra that the tails don't matter, but I get it a lot. I get it frequently from people. They absolutely matter. So that's it, okay? So you can see total range, bars high, bars low, and then again, this is the open and the close. So what's more important is the next slide, all right? This is one of the most important, powerful slides in all of technical analysis. If candlesticks are the foundation of technical analysis, right, then how a bar forms, where a bar forms, what a bar looks like is very, very important, right? So remember, if these candlesticks, multiple candlesticks, form pivots, those pivots form a chart. Those charts will form patterns. Those patterns are how we make money, and it all starts with one, right? The journey of 1,000 miles begins with a single step, and that starts with one candlestick. And sometimes, guys, true or false, there are trades, yes, we base them off daily charts, but there are trades that you will literally take a 1 minute high on, which means you're basing your entry off that one minute candlestick using the daily or the 60 as your bias. So yes, that one candlestick you're basing your trade on is kind of important. When we take a 3-bar play, what are we basing the trade off of? 3 candlesticks, 3 bars. So yeah, each and every one of those bars is very important. Okay, so when we look at this, okay, you have to understand what this topping tail means versus what this solid green bar means. So if we look at this, and I know many of you have been through professional trading strategies, and I know you understand these, but let's do it again because it can't hurt to refresh. But when you look here, at one point in time, right, at one point in time, this right here was this bar, right? Look over to the right. See that bar right there? Okay. This bar to the left, call it bar number 1. 1, 2, 3, 4, 5. Bar number 1 looked exactly like bar number 5. Identical. By definition, identical. Okay? But it didn't stay that way. It didn't close that way. It didn't end that way. So I've done this before for you guys, but this is how I want you to think about this. Okay? This is how I want you to think about it. Give me a second. Right? That's it. That's how I want you to think about this. That's really what the bar looks like. Got it? Gosh, I can't believe I just said that. My son, who's 5, says got it like every 12 seconds. Okay? This is how I want you to see this candlestick. So now when you look at the candlestick like that, you're starting to think to yourself, just because it's green doesn't mean the sentiment here is bullish. There's a lot of red on this bar if I overlay this, because that's what the topping tail is. The topping tail basically means the stock traded all the way up to the high, and then sellers came in, they came in, they came in, they came in, they came in, and they pushed the stock lower, and that is selling pressure, which is red. And this is why I've overlaid this bar on here. Okay? That's how you have to think of this. Okay? Now, I'll skip for a second. Don't worry, we'll come back. And just the opposite here. You need to think of this like that, right? You sit there and go, okay, this was once a red bar and is now a green bar. This was once a green bar and now it's a red bar. This is, again, I'm trying to make it as simple as possible for everyone, not just new people, so you can really visualize. I think people are largely visual beings. So this was a wide range green bar, okay? And we could even do this, all right? I'm messing this whole thing up, right? Could even do this. This basically, I'll use this. Just give me a second. That turned into that, right? That equals this now. That's not what you want to see. After you start with this, you don't want to see this. Okay? That's not what you want to see. All right? So, where am I going with this? All right? This, just because it's green, is a sign of weakness. All right? It's a sign of weakness. However, where it happens is equally as important as how the bar forms. We'll get to that in a minute, but I just want you guys to keep that in mind. Where it happens is equally important as to how the bar forms. They are not mutually exclusive, all right? They are both equally important, okay? So when you see this, you have to look at this and go, hey, that's relatively bearish, okay? When you see this, this is a tug of war, right? Sellers in the bottom, or sorry, sellers at the top, buyers at the bottom, and you're going, okay, tug of war. So it's a little bit of red on the top, a little bit of green on the bottom, but it ended right in the middle, kind of like both of these. One's a little bit more bullish, but is it really bullish or is it bearish? What do you guys tell me? This bar right here, these two bars right here. Let's just use this one, bar number 2. Is this a bullish bar or a bearish bar? Which is it? Is it bullish or bearish? Bar number 2. Is it neutral? I'm getting neutral, 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 50-50, neither neutral, slightly bullish. Okay. Except for Johnny99, none of you paid attention to what I just said. None of you paid attention to what I just said. Did I not just say, and let me repeat myself, how the bar forms and where the bar forms is equally important. They are not mutually exclusive. They are equally important. So the answer to the question is, it depends. And what does it depend on? Tell me. What does it depend on? Thank you, Scott. Scott already answered the question. It depends on where it happens. If you had 7 red bars in a row down that look like this bar down here. See this bar on the right, number 5 on the right, red bar? If you had 7 of those in a row and you saw this, I'm pretty sure you'd think that's a bullish bar. Because you had 7 red bars, sellers, 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 sellers are in complete and total utter control. And then for the first time in 7 bars, the buyers step up and leave a little bit of green. Not much, but a little bit of green. It's the first time in a 7-bar period buyers stepped up. Now, what if we did the opposite? What if we were up 7 bars in a row? 7 green bars, up, 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 up. And then this bar happens. Now what are you thinking? Well, now you're thinking this is the first time in 7 green bars sellers have been able to make an impression on the buyers. So therefore the bar is largely bearish. But if you're 7 bars down and you see this bar, it's the first time buyers have been able to make an impression on sellers, and therefore it's likely bullish. So it's interesting how I think I speak clearly and I try to accentuate points that everyone missed that except for one person. This bar is neither bullish nor bearish. Just like this red bar down right below it is neither bullish nor bearish. It's neither. It's neither. It's totally and completely, utterly, it depends. It's not even neutral. It's either bullish or bearish, right? Now, obviously, if it happened in the middle of a base, it could be neutral, right? But generally speaking, it's either going to be bullish or bearish, depending on where it happens. Okay? So that's these 2 bars, 2 and 3. Now, we go over here. We'll pull this off for a second. Now we have a bar that closes near the high. Or, sorry, closes at the high. My apologies. But at one point in time, this thing was red, right? We'll pull it back over so you guys can see it. At one point in time, it looked like this. Right? Sellers owned this thing. They owned it. The stock opened right here, right where my cursor is, right there. It opened right there. And then it went lower, 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 lower. And then the buyers came in and pushed the stock up. It was like this. The buyers came in, 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 and they didn't stop right there. They didn't stop right here. They kept on going up. So think about that for a second. What kind of power, what kind of strength does it take to overcome that level of selling pressure? A lot. See, a lot of people will say this bar right here, definitely the most bullish bar on the chart. It opens strong and finishes strong. Well, there's an argument to be made for that. I'm not disagreeing with that. But you might be able to make a stronger argument that someone who's actually been tested gets back up and then wins in dominant fashion is stronger. You could make that argument, right? So sure, when a boxer comes out and just comes out swinging and dominates a fight, that's strong. But what if a boxer comes out and gets knocked down in the first round and then dominates the next 9 rounds? Dominates. You sit there and go, oh, now we know this guy's got a chin. We know he's got a jaw because he got knocked down, got back up, and won in dominant fashion. So I'm not saying this is stronger per se, but I'm saying you could make an argument because it has been battle tested that you know it's strong. This, you don't know because, guys, let's be honest here for a second. Let's be fair. This wide range green bar, yes, I know you're going to be like, what? No, it's true. This wide range green bar could have formed on 100 shares. It's fact. That's a factual statement. This could have been 20 shares, 20 shares, 20 shares, 20 shares, 20 shares, 20 shares. This is why volume, which we won't talk about today, is also very important, right? But over here, it's unlikely the stock went down, came all the way back up on 100 shares. It's possible. Of course it's possible. It's just unlikely, right? So where it happens matters, how it forms matters, and of course the volume matters. And all of the same attributes are true on the bearish side as well, okay? So over here, this is an extremely bullish bar. Why? Because it looks like this. That's what it really looks like, right? If we're being honest. right? It really looks like that. Why? Because at one point in time, right? At one point in time, this looked like this. Down, 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 right? And then, once it got to the bottom, right, this happened. Right? Once it got to the bottom, this happened. Little bit of buyers, few more buyers, few more buyers, few more buyers, few more buyers, right? And that's it. That's a pretty bullish sign. Now remember, where it happens on the chart matters. So if I saw this bar after 7 red bars, I'd be pretty bullish on this, right? Again, the doji just depends where it happens. Topping tail is extremely bearish because this used to be a green bar, right? I'll do it one last time. This used to be a green bar, and now it's not, right? Used to look like that. And then what happened? Sellers, 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 till they were gone, right? The buyers just disappeared and disappeared and disappeared and disappeared, which means the sellers took over control. All right? So very, very powerful. Now, I spent a long time on that, but you need to understand how a bar forms. So now, multiple candlesticks, okay? This should not be on the slide. I don't know why it's on there. Okay. So multiple candlesticks form pivots, and these pivots form areas of support and resistance. It is from these support and resistance areas that we typically enter trades. We do this by looking for multiple concepts to converge in one area. Guys, is this starting to ring a bell now? I don't know, 7 days ago, we talked about this very same topic in terms of multiple concepts. We're going to have a little kink in it today. We're going to throw a little, wedge in it, so to speak. For example, we might look for a specific price pattern, such as a buy setup with a bottoming tail, a green bar, increased volume near a moving average at support. The more concepts converging, the more likely the trade will work, right? So as pattern traders, we are also odds traders. And the higher the odds, the more likely we profit from the markets. So it is our job to look for the highest odds pattern we can find. This is how we effectively use our chart tools: price, volume, moving averages. So we're going to talk a little bit about those areas converging, but we're going to focus on what we just learned with bottoming tails, topping tails, etc., and so forth. Okay? So multiple candlesticks form pivots. All right? So this is a chart chopping around. You can see the moving average coming through the middle here. Stock goes down a lot. Now note, see this bottoming tail here? There's a pivot to the left, bottoming tail here. We might expect a bounce here, but we didn't get one. Thankfully, it looks like it never triggered. So this is an area where you might expect a bounce, but it didn't happen. Why do I say this to you? Why am I even bringing this up instead of just ignoring this? I'm bringing it up because we're not going to be right all the time. We're going to do our due diligence on every single trade that we take. We're still going to lose 30, 40% of the time. Sometimes more, depending on your management. So the edge we're talking about is super important, but it's not a huge edge. Guys, it's like sports. When you get to a professional level, the edge could be very small. What's the difference between a 250 hitter and a 300 hitter in baseball? Probably about $10 million a year, maybe more. Think about that. They hit the ball half a time more every 10 at-bats. Half. Not once more, half. And it's worth $10 million, 8 figures to them, okay, a year. Point, understanding this and using your stop loss, it goes back to when will the insanity stop. Take your loss and move on. We'll reevaluate later. This didn't trigger, but you understand the concept. So lower, 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 lower. Look at these wide range bars, topping tail. Now, what do we get? We don't just get a doji bar. Now remember, big time red bar on volume. Sellers are in big time control here. There's no question sellers. I mean, the stock went from 103 down to 80, 75, whatever it is. And then finally, for the first time in forever, buyers step up. Then you get another green bar. So now not only has it been tested once, it's being tested twice. And now over here, you're far from the moving average. Buyers step up. Now, this is what we need to talk about. The stock has tested this area on multiple occasions. That's over here, okay? It bounced on those occasions. This time it bounced, and this time, and this time, okay? This tells us buyers are in this area, but here's the rub. Unless it's climactic, which this borderline, really borderline, unless it's climactic, buying the first bounce is very aggressive, right? Because we don't know how committed the buyers are. They might just be short-term committed. They might be interested in a one-night stand. No, we're looking for marriage, so to speak, right? If that makes sense. So buying this, unless it's climactic, is an aggressive move. Even though we have a good idea that the stock's going to bounce because we see 2 green bars. But to actually put your money in it, you might want to wait, okay? Bounces up, then what do we get? A little bit of a topping tail, red engulfing bar, and then this topping tail. Take a look at that topping tail. This stock is still holding the moving average. Yes, it popped above it, but it's still near the moving average. This is why you wouldn't normally buy this down here, because we need confirmation, okay? So we get a huge topping tail, which tells us sellers are creeping in, right where sellers crept in over here. So this is the first area where sellers creep in, about a 50% retracement, right? Give or take. Chops around, chops around, chops around, and then this was a green bar at one point. So you're thinking, okay, if we break above the prior pivot, then we're going to look for the first pullback to buy. Let me repeat myself. It's super important. Please pay attention. If we break above 95 right here where this middle arrow is, and we go up to say 100, we are then looking to buy the first higher low. But because we did not break the pivot high, you cannot buy this bottoming tail. It's important because a lot of you do it. Because we didn't break the prior pivot high, you cannot buy the first pullback now. This actually becomes a double top retest and failure. It puts a kink in our plans. Now we have to be more patient. Cannot buy the first pullback. Even down here, I am very skeptical now. What does it do? Puts in a lower high, higher low, equal high. Okay? It would have been real nice had this broken 95, but there is an opportunity here. The opportunity is 1, 2, 3, 4, 5 bars down, super wide range bar at a double to triple bottom support. But because of the triple top at 95, we are not expecting this stock to break 95. So if we choose to trade it at $80, call it a $5 stop loss. If we choose to trade it at 80, the target's $87, 50%. And if we're lucky, we get back close to 95. But you have to read the chart, right? You can't just say, oh, topping tail, I'm going to short it. Oh, bottoming tail, I'm going to buy it. You have to read the entire picture, right? Not part of the picture. Oh, multiple red bars down, green bar, I'm going to buy it. That's an aggressive play for a stock that's in a downtrend because it could just as easily pivot and go lower. Oh, wait, it did. Now, in this case, you may have profited from it, but you understand the concept. We need a confirmation of strength. All right? So, I just talked about this. I'm not going to spend as much time on it. The reversal signs now, 7 bars down. Over here, 2, 4, 6, 7. Several bars are large bars into multiple pivot support. Increased volume, right? Ending volume. Green bar, bottoming tail, right? Doji bar, narrow body bar at the bottom at support. This is a tradable event. The rest of it, not so much. You might get away with it, but it's not really tradable. But this is, without the expectation it's going to break 95. Okay? You saw this chart last week. I re-entered it. There's new charts in here, don't worry. But I brought this back for a reason. Because it goes to the concept we just talked about, right? We're not only using higher time frame with lower time frame. You're looking at 1, 2, 3, 4, 5, 6 green bars in a row. Well, You guys know right out of professional trading strategy. You've seen it. 3 bars up, think sell. 4 bars up, really think sell. 5 bars up, really, really think sell. Well, this is 6 or 7 bars up, and they happen to be wide range bars, and we're far from moving against. And all there is the first sign of weakness, right? The first sign of weakness: topping tail, bottoming tail, doji bar, followed by another topping tail. See, it starts with this little topping tail in the green bar. Sellers are creeping. Over here, they're in a full-out fight. See, over here, the buyers still won. Yes, sellers are creeping, right? They're creeping. But over here, the buyers, I don't want to say they've left the building, but it's like a change of guard, change of power. Does that make sense, right? Out with the old, in with the new. Well, the new is sellers. Buyers tried one last gasp. Put in a higher high. One last gasp, 267. Failed miserably. You shorted it, 66.50. Your stop's at 67, right down to the moving average or a 50% retracement. Then this one gave you an opportunity because of the failure here to short it again at 65.50 or add to your position. Used with the daily, which is also up a gazillion bars in a row. So we have candlestick analysis, individual candlestick analysis here, right? Topping tails, bottoming tails, doji bars. We also have higher time frame combined with lower time frame, bias time frame, entry time frame. We also have multiple concepts: far from the moving average, volume spikes, wide range. I mean, we are literally taking everything we know about technicals and we're putting it in one chart. Now imagine for a moment. Imagine if you did that on every single trade. Not just sometimes, but every time. And I'm guilty myself. Because every once in a while you tilt your head a little and you're like, that's pretty good. We haven't taken that many trades this week. Or you're in the chat room and you feel the pressure of people going, oh, we haven't called a trade yet. It's 10 o'clock. What are they thinking? No. It's better when you're not sure to sit on your hands than it is to take a bad trade. Okay? Because most of the time that bad trade's not going to work. And then you're going to have to dig yourself out of that hole. You'll kick yourself later. So, back to the concepts. Here's a stock that gaps up, initially goes higher, and then pulls back. But here's the rub. Red bar, wide range red bar, bottoming tail. So, let's immediately go to this right here, the first one. Audience participation. Help me out. Good buy setup. Yes or no? Good buy setup, yes or no? Talk to me. Give it a little thought, and then talk to me. Don't be shy. Don't be bashful. The good news about lectures is I don't single anyone out. I usually just chastise the whole group. This is challenging. And challenging typically means not the best, right? So the bottoming tail is nice. It's above the moving average, which is rising. That's nice, right? But what's not nice is the topping tail we see here, the red bar we see here, and the lack of confirmation. Guys, you generally speaking do not want to see a gap up with 2 bottoming tails and a wide range green bar fail this bad. Now, if the market rolled like it did today, maybe. But in a normal environment, you don't want to see a gap up over resistance with 2 bottoming tails and a wide range green bar go from 47.25 to 45.50 or 45.75. That is a nasty rollover. So, nasty rollover, but not climactic, and you want to take the first buy setup. I want confirmation. Trust me, every once in a while, you'll be wrong. This will hit, trigger, and work. It will. Right? And technically, it did. Technically, it worked, right? If you got in right on that green bar and used the low of the day as your stop loss, technically, it did work. But I'll tell you, I feel a lot better about the second buy setup because not only does it retest the prior low, it's at the moving average, which is still rising, and I have multiple bottoming tails, which means every time it tests 46, buyer steps up. It tests 46 again, buyer steps up, and guess what? They did it over here too. So you have 2 choices. Take the first buy setup with a super wide stop, add back later. That's a possibility, depending on how aggressive you want to be. or wait for a retest. And you know what? Sometimes you won't get the retest. But what did you do? You demanded quality of the stock. You demanded it of the stock. And this is one of the hardest concepts for traders to learn. And I had a very hard time with it when I started. When you demand something of a trade and you don't get in it until it gives it to you. Period. End of discussion. If you don't get what you want, you don't trade it. It's super hard for people because usually what happens is they will see this first buy setup and they'll go, okay, I like it, but I'm demanding the retest. And then the first trade works. And then the next time, what do? They end up taking the first trade instead of the second trade that they should have waited for, and the second one doesn't work. Does that make sense? Whoops, hold on one second. I don't know why that happened. Let's try that again. There we go. All right. So what I'm saying is sometimes you'll have a checklist and you go, I demand the retest. It has to give me the retest because of where it's at and how it's happening. I need confirmation of strength. And then you watch it not give you the retest and shoot the moon. It just triggers and works and you're like, gosh, why was I so kibishi? Why was I so strict with this, right? Why didn't I just take it? Because your checklist said you shouldn't take it. That's why you didn't take it, dummy. Yeah, but it worked. So they'll fail more than they work. Demand the quality, all right? Demand the excellence of it. And I know it will be frustrating sometimes. Now, here's another example. Here's the daily chart. We're not going to focus as much on that. I want to focus down here. Stock gaps up, big time red bar. I don't want this first buy setup. I do not want this first buy setup, right? It's too aggressive. You're buying right into a wide range green bar. But what I do want to see is confirmation. I want to know, is this a fluke? When buyers stepped up down here at $7.50, was this just a one-off? Was it lucky? Is it going to do a 50% retracement and then fail? I don't know. And because I don't know, I need what? I need a confirmation of strength. In this case, that happens to be a retest, but it's a bottoming tail retest. It's not a full pivot retest. So the stock puts in a green bar, puts in a little narrow body doji bar, right, with a bottoming tail, and then this happens. This was the deciding factor in this trade. As soon as we saw this bottoming tail, it was like must take trade, like robotic. Animal instincts came in, must take trade, right? Why? This is the confirmation we were looking for. It came right back down to 750 and magically buyers stepped right back up. And it's like, oh, I guess they weren't kidding the first time. They were serious about buying this thing up at 750. So if they're serious about it, they have my support now. Okay? So you put the stop under that area, you get in right above here. Because now you have that confirmation of strength, that bottoming tail. And remember, let's go back for a minute. This bottoming tail, okay? It's really this, right? It's really this. This is what you're actually seeing, right? You're actually seeing buyers be tested from the sellers, and then the sellers shrinking into the distance, and the buyers stepping up until all the sellers are gone. And if all the sellers are gone, there's nobody to sell into you on the way back up. All right. Now this one gave another little, doji bar and then triggered later. But that confirmation was what we needed. Okay. Same. You see this? Is this important? It's not important. It's everything. It's not some of the thing. It's everything. Okay. Sure. Could we have taken this without that bottoming tail? Yes. We could have gotten in at 130. Right. I mean, if we do this, right? Give me 1 second. Right. If we do this, just draw this over. By the way, guys, just as a side note, this is a really good thing to do with your charts. Like a really good thing. Cover up the future and see if you still like what you took. Cover up the future and see if you still like what you took. So we could obviously take this over 130. It's a little bit of a wedge and ascending triangle, right? I get it. We could. Nothing terribly wrong with that. And the 130 on the 60 minutes, exactly where we want to trade it because there's void above. Perfect. So we've done our higher time frame focus. We've done our lower time frame. But when you get this, to test the low and leave a bottoming tail right, like immediately on a 2-minute bar, and then goes nearly right back up and then gives you this pattern. So you had the choice. You could have taken 130 and used low of the day, but instead we got a 4-bar play. This is the one we chickened out on, the one I chickened out on. Got a 4-bar play with a stop down here, and this thing ripped. That bottoming tail is just another confirmation. It's just another way that says, hey, the stock was already strong. It was. It was basing near the high of the day. It had lots of void. It was already strong. But this shows us it really, truly is strong. It's been tested now, and it passed the test. Okay? It's like, hey, I know that person's a smart kid in the class. But if we test them and they fly, pass with flying colors, then I know for sure now. Same thing with stocks, all right? What about this? We have a gap down, all right? Kind of a consolidation, a little peekaboo, and then what happens? A little peekaboo, big time green bar. Market makers are laughing. Laughing, ha ha, gotcha. You're sitting here going, oh, that's a crappy 3-bar play. You want to take a crap 3-bar play? Well, enjoy this shakeout with slippage, because that's entirely what looks like happened. All right? Big green bar leaves a topping tail, gets completely engulfed by a red bar. Now, the engulfing of the red bar and this bar right here. Okay? So let's do it again. I think it's important, guys. I think you need to do this on a lot of your trades. Let's do it again. Okay? Let's move this over here. Now, could we take this down here? We could. It's a little bit aggressive, right? But we could take it. But it would be real nice to either have a longer consolidation or another confirmation. Longer consolidation, which is a confirmation, or a more immediate confirmation. How do we get that? Well, you get it by either a turnaround bar or a topping tail bar or some type of picture of money, picture of strength, right? Well, in this case, weakness, but you understand what I'm saying. What do you get? A little topping tail bar followed by, there it is, topping tail bar, followed by a lengthier. We got both. Oh my gosh. We not only got the consolidation through time, which is 2, 4, 6 more bars, we also got the topping tail, which means buyers tried to step back up twice. Seller said, no, I don't think so. We got this. That should leave you a lot of confidence to short this stock at that $12 range. Okay? So this is one of those that is really nice, right? We think we would have taken the first trade on this. You know what I mean? It's not really a 3-bar play. I mean, the bar number 2 is much deeper into bar number 1. Bar number 1's arguably not a wide range bar. This is a wide range bar. I mean, there's reasons not to take that first trade. So, but the point simply here is that you got everything you asked for. You demanded longer time, right? More confirmation through time, and you demanded more confirmation through price. You got both. Take the trade. Take the trade. Okay. Same. What do we have? You guys saw this chart last week? Breaking above 154, 155. Bottoming tail? Sweet. Consolidating near the high? Sweet. Oh, there's that retest again. Right? There's that little retest right there. Another bottoming tail. Feel good about it. All right? Feel good about it. You get a little 3-bar play? Looks good. So remember, when you're doing this stuff, guys, think about where is it happening and how are they forming? Where is it happening on the chart? How are they forming? And we've seen both of these, right? We can go back to this. When you're up this many bars in a row and then you get a topping tail, it's extremely bearish. If you were down a gazillion bars in a row and you got that doji bar, it's bullish. Oh, let me repeat that so you understand me. This stock was up a lot of bars in a row. We got a red doji bar. It's bearish. If this stock was down 7 red bars in a row, and then you got that same bar, it's no longer bearish. It's bullish. So it's the same exact bar. But where it happens changed the sentiment. Right? It changed your opinion of the bar. In this case, it's bearish. In a different circumstance, it could be bullish. So know where you're at on the chart and know the type of bar that has formed. All right? And if it's not clear, step away and wait for confirmation. Okay? Step away and wait for confirmation. Okay, so we talked about it last week. Reiteration. Multiple concepts converging in an area, discernible patterns, bottoming tails, topping tails, wide range bars, narrow range bars, etc. Patterns happening at prior support or resistance, retracement levels, change of color bars, increased volume, showing good liquidity. It's within its average trading range. I mean, you need a checklist. If you don't have one, you're a gambler. It's like that when will the insanity stop person asking if they should get out of their position. I don't know. What does your plan say? What does your checklist say? I don't have one. Well, then you're not trading, you're gambling. Guys, this business is effing hard, man. Like, this is the hardest damn thing you will ever do in your life. You are not going to get rich quick at it. And it's really, really hard when you keep shooting yourself in the foot by not following the rules, not having a checklist, and then taking trades that are mediocre because you ignored your checklist. It's hard enough. Don't make it harder on yourself, okay? So after getting all of those things, then you can look to see if there's an indicator confirming what you're looking at, right? We talked about that last week. Then you can look to get into the trade. If it's missing these, just move on. There will be another trade. All right? So I hope that you guys learned a little bit about candlesticks, not only the formation of candlesticks, but where candlesticks are happening is equally important as the actual formation of those candlesticks, and that you will also demand quality. Absolutely demand quality when you take trades, because this business is challenging, man. And we only make it harder on ourselves by not following these rules. So I'm Jared Wesley of Live Traders. We'll get back at it again next week.